We've already seen private capital in terms of the flow between U.S. and China dry up pretty dramatically in the last year or so.
Yeah, it's actually something that we worried about from the Chinese side, as CFIUS and FACTA came into play more so on the U.S. side, that there would be repercussions on the Chinese blocking potentially U.S. investors coming into the market. Most of the companies today in China that you see, even the Tencents, Alibabas of the world, and the emerging ones, the Meituans, the Pinduoduos, if you look at their cap table, many of their largest investors are venture capital firms, most of whom are backed by U.S. institutional investors, pensions, endowments, et cetera. And so the irony is that many of these Chinese tech giants are owned by American public. And so our view is that the Chinese themselves might cut off some of those capital flows. And there are a lot of other people that are willing to pick up that mantle. The sovereign wealth funds coming out of the Middle East, Southeast Asia are now very much interested in increasing their exposure to the market.
Interesting. Gwen, I know the NASDAQ has come out in recent weeks and said when you look at the IPO pipeline here in the U.S. that quite a number of the companies they're expecting to go public are Chinese. Do you think that comments like this and I guess just the broader stances being taken in the midst of these trade talks and issues with Huawei, et cetera, that could change?
I think there are two things at play here. One is the spat over Huawei is not just over a cell phone provider. It's actually one of the biggest network equipment providers globally. It has a third of the global market share, twice that of Qualcomm. So the fight is over both the dominance in 5G infrastructure.
Ben, how much of this damage is permanent and how much of it just sort of evaporates if there's a trade deal?
Certainly there's a sentiment that some of this is a bargaining chip and part of that process. But I do worry about a lot of this decoupling that's gone on. And we think of it from a U.S. context where we say that we're trying to decouple American supply chains from China. The Chinese are also trying to do the same with us. And they view this situation as generating an environment where the U.S. is no longer a reliable counterparty for them. And so as you see a reduction in imports of U.S. chips, if Huawei does make good on its commitment over the last 2 days where they've kind of showed their hand and said that they've developed their own operating system, their own domestic chips. Today China is 40% of the global chip market. Only 10% of that is domestically produced. Everything about the growth of Chinese tech over the last few years has bucked all trends in terms of the timelines that we thought this would evolve. And so while they don't have that domestic chip industry today, events like this over the last 10 days will accelerate that evolution. And if we don't have American chips flowing in there, they'll develop them elsewhere. And if we don't have American operating systems, the Android operating system sitting inside of these phones, like the Huawei phones, they'll develop their own operating system, which ultimately might disintermediate U.S.
Sounds like
providers.
Made in China 2025.
Well, Gwen, this was sort of the topic of an FT op-ed yesterday, and we've had analysts at our desk in the last 24 hours arguing that depending on the type of chip that you're talking about, certainly when it comes to Huawei and communications chips, they have built enough of a head of steam where they could develop self-dependent supply chains. Is that true?
So they have sort of stocked up 3 months of supply, Huawei has, and they've been developing their own operating system for months, maybe years by now, but they still haven't made that gap between when Google Android sort of stopped servicing them. I think the other interesting part here is CFIUS, which is an acronym that nobody's heard of until last year. It stands for Committee on Foreign Investment in the U.S. It stopped 2 deals last year, Ant Financial's acquisition of MoneyGram and Broadcom's bid for Qualcomm. The interesting thing is it's actually reached back to divest past deals. So Kunlun Technology in Beijing has agreed to divest Grindr by next year. So it's interesting that blackmail risk is now part of national security risk.
Gwen, if memory serves, you're in the process of raising a new fund right now yourself. Would you invest in China or companies with exposure to China?
I think it's really important, especially nowadays, to keep in mind capital does not flow freely across borders. CFIUS actually reached back to block 2 deals that has already completed, forcing divestitures. So not only is it important to on the investment side, but also it's important to look at who your LPs are. So in 2017, CFIUS blocked 2 deals that were by Chinese private equity firms for U.S. tech companies. So it's important both ways.